And then I will start with, I guess, some basic information, and we'll go from there. All right, so let's see. I wanted to start tonight actually with just kind of a review of a couple things in the announcements that people miss sometimes, and then go over a little bit about the class topics. So a couple things I've noticed people are missing in the announcements. Right here, this homework support presentation, there's a link if you forgot which one you're signed up for. And I have people regularly emailing me to say, which one am I signed up for? It's there in the announcements each week. You can just click on it. It takes you right to a Google Doc, and it has just a list of by week of who's signed up for which. So that's one thing I kind of want to just put out there as a reminder. The second thing is this homework support participation report. I realize the homework support participation is kind of lame, meaning you're supposed to go in there and like make a comment like, hey, good job, or ask a question. I didn't create it, but that's the way it is. And then by the end of the week, you're supposed to go into the homework support participation report, little quiz, and kind of grade yourself. I just want to remind people that if you don't participate, that's your choice, that's fine, but you can't give yourself credit for participating if you don't. That's called cheating. Even though it's a relatively small number of points, you still just should have the, I guess, the honesty to not give yourself points for something you didn't do. So I wanted to remind people of that. It's like, it probably won't even, it'll barely hurt your grade if you don't participate in that. But
well, you go see if we did by seeing if we
right.
have comments.
Well, and see,
So,
exactly. And so because it is a little bit of a hassle for me to have to cross check that, I often just trust people, but then every once in a while I'll check it out and say, wait a minute, there's people giving themselves the points, but they're not participating. So then I have to go back and give them zeros, and
right.
a stern chastisement or whatever. Anyway, just honestly, just participate. It's easy points. And if you don't mark it. Peer review. So there was a little issue with the peer review, and that is the system is supposed to be set up to automatically assign people to peer review the papers, and for some reason it didn't do that. So it wasn't until like Wednesday when I had students asking me, saying, I think it was Wednesday, saying, how do I get to this, that I went in and saw that the system didn't do it. So I had to assign the peer reviews, and now when you go to the paper, it should be there, and you should see the ones you're supposed to review.
Well, your picture.
What's that? Frozen up?
And for the peer review, where do we send the essay? In their email? Where do we post it when we finish?
You shouldn't have to post it anywhere. So you will go to your week 4 paper, and over on the right hand side there'll be a list of there should be 2 names for you to peer review. You'll click on them and do the little peer review, and that will automatically send to them.
Yeah, I did that, but then I got their essay downloaded to my computer so I could read, and then I have to mark, and then where do I upload?
I don't think most people are doing that. You don't have to. And the short answer is I don't know if there's a place for you to upload that back in there.
Can't you just comment on their paper when you
right.
pull it up?
The peer review system is set up that you can comment right in it if you wanted to. And I don't know. And unfortunately, when I look at it from my perspective, the instructor perspective, I can't see exactly what you see. So the shorter answer is I don't know if there's a way to upload comments. Certainly you could email it to them and say, hey, I just wanted you to have this more detailed feedback if you wanted to do that at their BYU address.
Yeah, I have done this in the past for like 2 other classes, and it was completely different from this class. So that's why I'm so confused.
Okay. Well, I don't know what to tell you other than the way this system is set up is you do it all within that little peer review system. You don't have to download their paper and put comments on it.
I just know that I have 2 names. I haven't gotten that far.
Yeah, and maybe, if we wanted to, we could share one of your screens and we could see what it looks like from the student perspective, and see if there's a place where we could upload that. I just can't see it from a student. I can go in as a test student, but then the test student doesn't have any peer reviews assigned to the test student because the test student didn't write the paper in the first place. So that's why I can't see it. Janice, would you be willing to navigate to that on yours, and then we can share your screen and see it?
Sure. You'll have to unshare your screen.
Right. Patricia, would that be helpful to see if we can?
Yeah, that would be great.
Okay. Yeah, I'm sorry that I just don't have a good answer for you. So let me stop sharing my screen, and then Janice should be able to share her screen. And now we'll go to the modules. Should be week 4, right? Yeah, right there.
And then I have 2 names.
So go ahead and click on one of those.
Then you open the document, looks like.
So it does download it. What is the view feedback button there in the upper right? What is that? So that just shows you a preview of their paper.
So you put your comments here?
Okay, look over to the right. There is an attached file. So you can write general comments, and then you could attach their paper. But really, scroll down a bit. So you could
just seeing what happened.
Right. So you could attach a copy there if you wanted to, Patricia.
Oh, okay.
But there's supposed to be a rubric for you to. Oh, look in the upper right. This is confusing. In the upper right, it says show rubric. Further up.
I think you're blocking it. Okay, show
Oh,
rubric.
my face is in the way. Sorry. And so you're supposed to use this rubric.
It doesn't want to move. Okay, so you can scroll up and down, and you can look at what you're looking for.
And so you're supposed to use that. Yeah, that preview is not helping you much. It'd be much easier to download it, like the way Patricia was saying. So I'm glad you brought this up, Patricia, because this isn't obvious at all, I don't think, where everything is. You don't have to open their paper right now, but mostly just so we can see, you can add general comments there, and you're supposed to fill out the rubric form.
Well, it didn't look like it was a form to fill out.
So go that way. Don't show the rubric. Go down to where you can scroll over to there you go. No, I don't see anything there. Interesting. I'm glad you're doing this because this is not what it looks like from my perspective.
Wonder if I click on attach file.
No, that will just allow you to choose a file to upload from your own computer.
Oh, so if we download the paper in Word, then you can make comments right on the paper from Microsoft Office.
But the instructions say, so the instructions say for it to be considered finished, and I think that means for you to get a grade for having done this, you have to leave a comment, The comment could be as simple as see the attached file, I suppose, and fill out the rubric form to the right. So, and I don't see where you can fill out that rubric. Try the show rubric again, and let's see, can you click on those? So they don't stay, huh? Oh yeah, there.
Well,
and then
yeah,
scroll.
yeah,
Okay,
they stay. This
and then
this is where you
scroll,
fill it out.
and then you scroll to the bottom, and there's probably a
Save comment.
Save comment. So that's so. In other words, in order to do this assignment, you have to show that rubric, rate it on the rubric, and then leave a comment. Those are the bare minimums. And how do you get rid of that thing? Oh, there's the X. And then if you want to give them better feedback, you can also attach the file there. Does that help, Patricia?
And it looks like you
yeah.
can do.
Now,
Looks like you could do a voice comment too.
Yeah, those media comments you could actually either do voice or like a little video comment.
So it looks like you can do a.
Right.
If you have your webcam, you can do a media comment.
You could say like, I read your paper and it made me weep with joy, or something like that.
So you have to click on what part of the rubric you think their paper is.
Right.
Make some comments, either here or.
Right.
Put something here saying there's a media comment, or I've attached a file of your paper with my comments, or something.
Or you could just give general comments right in there, you know. So yeah, that's what the system's going to pick up as having completed it. And this is definitely one of those that it's just like you either did it or didn't do it. You know, there's no grading of me saying your rubric was filled out incorrectly and this person did way better than you said they did, or, you know, this is, and it's, you know, so just try to give honest feedback. You know, I know everybody hates doing these, mostly because you feel like you're judging somebody or something, and you're not judging them, you're just trying to give honest feedback on their paper. All right. So hopefully that was helpful to everyone. So let's go back to my screen now.
Thanks. I didn't know how to do that.
I didn't either. So again,
that's a good question.
I never get to see it from the student perspective.
That's not at the top of my priority right now. It's finishing today's homework and the self-study.
Right. So
sorry, the two people I'm assigned to, you're going to have to wait a little bit.
Okay, so let me just bring up a couple things from the chapter that I wanted to go over and make sure everybody understood, and then I can go to questions. So this chapter we get into merchandising companies, and there's a few things different about them. Mostly is that they don't have service revenue, but instead they have sales revenue, which just means revenue from selling stuff. And then also that we have cost of goods sold, which is a special expense that we haven't seen on the service revenue. I mean, on the service company income statements. What makes cost of goods sold special or different is that it's what we call a variable expense, meaning it varies based on our sales. So the more we sell, the more our cost of goods sold will be. The less we sell, the less our cost of goods sold will be. That's different from something like rent, right? Because whether we sell 1 item or 1,000 items, our rent is going to be the same most of the time. And so the cost of goods sold is linked directly to sales. So it kind of has a special place on a merchandising income statement. So we have our sales revenue minus our cost of goods sold, which will give us our gross profit. And then our gross profit minus all the other expenses, which we call operating expenses, which will give us our net income. So that's the first thing that's a little bit different when you are doing a merchandising company. Another thing I wanted to bring up is the way inventory sort of works. It's logical when you think about it, but it's just not obvious because we don't typically work with these concepts. But any inventory you have at the beginning of the period, plus any goods that you purchase. Those two things together add up to what we call cost of goods available for sale. So what we have plus anything we buy, and then we sell our stuff during that monthly period or quarterly period, whatever we're measuring, and we're either going to have cost of goods sold, which is the cost of the goods that we sold, or ending inventory, meaning the cost of goods available for sale is going to equal our cost of goods sold plus our ending inventory. So again, beginning inventory plus anything we purchase is what's available for sale, and then either there's the stuff we sold or what's left over in ending inventory. And that pattern gets used over and over again in merchandising concepts, so it's just important to understand. All right, freight costs. If we sell something to somebody or if we buy something from somebody, who pays for the freight and who owns the freight at any given time? This is a little confusing sometimes. FOB means freight on board. And so you'll see that designation often when you purchase things. Usually there's only two options. You can buy things FOB shipping point, meaning that the ownership changes at the shipping point. So the seller puts it on board the carrier. The seller no longer owns it. Now the buyer owns it, and the buyer pays for the freight costs. This is important if, let's say, the public carrier gets in an accident and our goods are destroyed. Did they belong to the seller or did they belong to the buyer at the time they were destroyed? Whose insurance is going to deal with it? So FOB shipping point means ownership changes hands when it's loaded on the public carrier. The other reason this is important is if I sell something at December 28th and put it on the public carrier, then I immediately take it off of my inventory and it belongs to the buyer now if I sell at FOB shipping point. And say the buyer doesn't get it till January 2nd, it's already off of my records at the end of the year. The opposite way we can do it is FOB destination, which means it changes ownership when it gets to the buyer. And that means it belongs to the seller the whole time it's in transit, and the seller pays for the freight costs. So those are the two ways that we usually account for freight costs. All right. One other thing is we have purchase return, we have purchase returns and allowances, and these have to do with if it's a purchase return, that means we're the purchaser and we're returning those to the seller. Typically on a return, it means we return the items to the seller and the seller returns us our money or reduces the accounts receivable which would be an account payable to us, reduces that, and we don't have to pay for those goods. An allowance is a little different because usually that means the purchaser keeps the goods and the seller just gives them a reduction of the purchase price. This happens sometimes if the goods are a little bit damaged, but the purchaser says, "Hey, I can still use them." So an allowance. That's just, I wanted to explain the difference between a return and an allowance. And then this concept of purchase terms. A lot of times these get confusing to people. So this is how they're written. Like this one is written as 210 net 30. Whoops. Which 2/10 means a 2% discount if the purchaser pays within 10 days. And then the N30 means the net or whole amount is due within 30 days. So if you pay within 10 days, you get 2% off the purchase price. If you pay on the 11th day, you get no discount, but you have to pay by the 30th day. 110 EOM, or it could be 210 EOM, or it could be any combination of these things. But 110 EOM means 1% discount if paid within the first 10 days, and that it's due by the end of the month. And then EOM means 1% discount if paid within the first 10 days of the next month. And then N10 EOM would mean the net amount is due, so there's no discount there. So just recognize you have to understand what these little terms mean. as far as the discounts and how they would be applied. Another item from this week is to recognize, so now we're switching from the purchaser side to the seller side. So remember, whenever we do merchandising, we have to be prepared to do the accounting both from the point of view of the purchaser, if our company is the one doing the purchasing, or from the point of view of the seller, if our company is the one that is selling products. Anytime we sell a product, we have two entries we have to make. The first entry is at the sales price. That's to record the money that we receive from selling it and the revenue, the money we earn from selling it. So the credit is always sales revenue, and the debit is either going to be accounts receivable if the customer is going to pay us later, or cash if the customer pays us at the point of sale. And then this will be at the selling price. So not at what we carry it for on our books at cost, but what we sell it for. And then the second entry is always going to be our cost entry, which is going to be a debit to the cost of goods sold expense and a credit to the inventory account. So these two transactions always get recorded when we sell something. Finally, I wanted to introduce the multi-step income statement, which is similar to the income statement you've already seen, but has a lot more detail. In fact, so much more detail that it can be confusing a bit. So it starts with our revenue, which we're accustomed to, but then it has this less sales returns and allowances and less any discounts. And then our sales revenue minus the returns and allowances and discounts is going to give us our net sales. And then our cost of goods sold, which again is that cost of the goods that we're selling. And so our net sales minus cost of goods sold gives us what's called gross profit. Another word for gross profit is our profit before operating expenses. Then we have all of our operating expenses, and our gross profit minus our operating expenses is called income from operations. Sometimes you'll see it written as operating income, same idea. And then other revenues and other expenses. These are non-operating. They usually are interest. This is a gain on disposal plant assets. So this is like maybe they sold some equipment, but they're not in the business of normally selling equipment. So that goes as an other revenue. And then interest expense. And looks like they lost something from vandalism. So these are just other non-operating incomes and expenses. Finally, so we take our income from operations plus any other revenues minus any other expenses gives us our income before income taxes. Subtract out income taxes, and finally we have net income. So again, that's got a lot more detail than what we're used to, but it still flows in the same basic way, which is revenue minus expenses. They just break the expenses down into a bunch of different categories. And those are the things I wanted to cover as kind of crucial. Now, I'm sure you'll have some other questions from the work you've already done, or maybe you won't. But
so before your sales thing you put up, the recording sales, did you have one about recording purchases before that?
I did not.
You didn't? Okay.
No, because the reason I didn't have it separate is because recording purchases just follows the kind of basic pattern of journal entries that we've always done. Whereas sales, you have to have those two entries at the same time, which confuses people. It's something new. But I'd be glad to answer questions about purchases if you want.
I am on homework 1 on the first group.
I have a question, but go ahead, Janice. It's just a clarification about what you said.
Yeah, go ahead and ask your question before we get into looking at homework problems.
Okay. You said that before we were like the sellers and now we're the purchasers. Is that what you said?
No, what I said is we have to be prepared to make entries from either of those two perspectives, because many businesses both purchase goods. So most, like a retail business, say like Walmart, they purchase goods from suppliers. So in that respect, they're acting as a purchaser, but they also sell goods to customers. So in that respect, they're acting as a seller. So we have to be able to do both of those two things.
Okay, so we're gonna be like Walmart, let's say. we're kind of like Walmart. I'm just trying to visualize, because it's a lot easier when I can think from a business owner perspective when I'm like doing homework. Is that right?
Correct. We're learning about being a merchandiser, which is a business that purchases from suppliers and sells to customers.
Okay. The other question I had was, the book said that most businesses uses a perpetual way of doing this. Is that right?
Correct.
But then we're doing a ton of homework on the periodic format. Why is that?
It's a great question. So I can't answer that question because I didn't decide which problems would go into the homework set. This was all laid out for me. I will have you know that in my class where I teach this full time at Eastern Arizona College, we spend almost like 90% of our time on perpetual systems and just sort of touch on the idea that periodic is still out there for small businesses, but that most people don't use it. So I'm not sure why the designers of this course decided to spend so much time on periodic systems. I don't have an answer for that.
But would you say it's harder or easier?
Neither. They're just two different ways of looking at it. In real life, perpetual is nicer because you always know where your inventory stands. Whereas in periodic, you don't usually tally that up until the end of the period. So there's some real advantages to a perpetual system, which is why everybody's moved to it. The reason some small businesses are slow to move to it is because they can't afford the technology like barcode scanners and things like that. But in the last 15 years, barcode scanners have become increasingly inexpensive, and you know, systems like QuickBooks Point of Sale you could set up for under $1,000 now. When I first started doing this, only big stores could afford, you know, all of that equipment. But as far as why we're doing so much periodic, I don't have a good answer for that.
Okay, thank you.
Yeah, that's it. Okay. Homework
yeah,
1, you said?
Part 1, yeah. So it's this first group submission, part level submission 5-1A.
5-1A?
Yeah.
Okay.
So I don't know. This is just so confusing. I don't even know where to start asking questions. Like, some of the stuff says we purchased supplies, then it says we purchased merchandise, and then like 29 cash customers. Which one does that refer to? This one? Like, does 29 refer to 24? It's really hard to tell.
Okay. So I'm not sure. I'm not even sure what you're asking, I guess.
So first of all, on 11, purchase supplies for cash. So that would be, so cash would be your credit.
Right.
Which date is that?
May 11th.
May 11th. So, okay, so you do put supplies on that one. If it says supplies, and then if it says merchandise,
then we debit the inventory account.
Then we debit the inventory account. Okay, and on May 29th.
Okay.
Is that referring to the May 24th thing?
It doesn't matter which one it's referring to.
Well, it just says that we returned cash. Did it say an amount? I don't remember.
Yeah, so it says on May 29th, it says made refunds to cash customers for returned merchandise of $135. The returned merchandise had a cost of $100. So the reason it's telling us cash customers is we know that we're paying that money back in cash as opposed to debiting accounts receivable. And so
so it's a sales return and allowance that it goes to, because it's a return. When we're returning something on cash or credit, we put
right. No. So yes. So if it's a sales, so if we're the seller, then what we're doing is we're debiting sales return and allowances and either crediting cash or crediting accounts receivable. One of those two things. If we're the buyer of something and we return it, that's different, because now what we're having to do is credit our merchandise inventory account, right? Because our inventory is going down because we're sending it back to the supplier. So that's the big thing to get straight on these is, when I'm in the process, am I acting as a buyer or a seller? And in this case, I'm a seller who's accepting a return from a customer and giving them their cash back.
So this whole journal thing is one merchandise company?
Yes.
So when you say you're a seller, you're saying you're a retailer seller, or you're a seller that sells as a wholesale seller that sells to a retailer?
It doesn't really matter for our purposes here.
Okay.
Because what we're doing is just trying to figure out, so did I sold something to somebody and now they're returning it. So if that's the case, then I'm going to debit sales returns and allowance and credit either cash or accounts receivable, depending on how they had paid me. And then I have to also do this journal entry to show my inventory going back up, because those goods are coming back into my inventory, and my cost of goods sold going back down because they're not sold anymore.
So on the 29th, what would change if you put accounts receivable there?
Only accounts receivable. That's the only thing. Everything else would stay the same.
No, I mean, like, what would the situation be?
Right. So instead of me handing cash back to the customer, just the fact that I had already, the customer owed me money, now the customer will owe me $135 less than what they owed me. Does that make sense or no? So to credit accounts receivable means I'm now owed less money than I was owed before.
So you're saying instead of sales returns and allowances, you have...
That would stay the same either way.
Well, the 31st has accounts receivable. What did the 31st say?
So let's look at May 31st. Here I sold merchandise on account.
Right.
So now my accounts, so if I did that, my accounts receivable goes up and my sales revenue goes up. So this was a return of stuff, but on the 31st was a sale of stuff.
And so receivable because money came in.
Well, because the customer is going to owe me that money. They didn't pay me cash, so I sold it on account.
That's right. It said on account.
Yeah. Whereas this transaction, you were asking, did that come off of the May 24th transaction? And the answer is, I don't know that.
Because it didn't really say.
Right. But it came off of a transaction like this one where someone had paid me cash. And so I was just giving them cash back. Whereas if someone had made a return on this sale, instead of giving them cash back, I would just credit the accounts receivable account so they don't owe me that money anymore.
Okay.
Does that help, or does it just make it more confusing?
It's really hard to remember what goes in which part of the journal. It's sort of mind-boggling to me.
Right. Well, I just have to go back to kind of like, like back to the first chapters where I have to say, okay, what's happening? I'm receiving the goods back from the customer, and I'm giving them cash. So my cash is going down.
And my accounts receivable is going up.
There's no accounts receivable.
No, accounts. Are you referring to number 29? Oh, okay.
Yeah. So my cash is going down, my inventory is going back up, and then I have to get rid of the cost of goods sold because, well, it's not sold anymore. I took it back. Mm-hmm. And then we record sales returns and allowances just so we can add those up over the period and then show them on our income statement when we're figuring out the net sales income.
Okay. I think the rest of this one is where you do your income statement. I think is like the next. Oh, there's 3 more sections. I have
Yeah, so
no
then you have to
idea.
do the T accounts so you can have the balances of each account.
Oh, so I have from my journal, I have to put it into that. Then I have to put it into the income statement.
Right. And so they're going to have you do, sales revenue minus the sales returns and allowances minus the sales discounts. That'll give us net sales. Then minus our cost of goods sold, and that will give us gross profit. And then they want us to figure out our profit margin and gross profit rate.
Right. And is the last problem similar to this one, just like another one? Oh,
So
wait.
let's see. So they give us an adjusted trial balance.
Oh, we have to put it in the.
And then we have to use that adjusted trial balance to.
So this first part is the adjusted trial balance.
Right. But it doesn't give it to us in trial balance format.
Right.
Which stinks. So you have to figure out what are debits and what are credits.
Right.
But then you have to use that to build the income statement.
That's the one I had the most trouble with. And it's that part right there.
Which part right here?
A long time. Yes, because I never know the order. Like it's changed a little bit from the previous weeks that we worked in this making the income statement now, because it's, I don't know what it's called.
Right. So this classified income statement is what it's called. So it has all this additional info. You mean that's what threw you off?
Yes, I don't know. Like,
so not the amounts, but the getting all of these right, so you can then find the amounts up here and put them in is the hard part.
Yes, I got some of them wrong because I didn't know the account. Luckily, you have 3 chances, but
right.
Still,
and
I
the book
know how to do it.
The book has a pretty good picture of a classified income statement.
Yeah, that's how I used. But then there is I think it was when we hit, I don't know if it was depreciation or returns, that the exercise had something different than the book. Okay. And I was trying to find an example.
Let's see, I'm looking on page 231, and it total operating and then income from operations. So yeah, so the example one on page 231 only has 2 line items of other revenues and gains, whereas this one only has 1 line item. So yeah, there's a few little differences, but it is very close. Just that it has a couple variations like that. Like instead of 2 of a certain item, it only has 1.
This printed book is weird. At the top it says 231, which shows me what you're talking about. Then on the bottom of my book it says that's page 242.
Yeah, you might have like an international version or something that has different page numbers. I'm looking at illustration 5-11.
Yeah, me too.
Okay.
This came from the BYU bookstore.
Right. So. I'm just saying that might be, and well, see, I have like the instructor desk copy, so it might be a little off, but usually I would just wanted to put that out there because maybe someone who hasn't done this yet, it would be helpful to them but I hope they have it because it's due
today.
It's due in about 4 hours. Yeah.
Yeah. I have to finish this one and the self-study. I haven't gone all the way through that one yet. So I have a ways.
Patricia, earlier you asked why they're doing so much periodic, and I think it probably has to do with whoever designed the course, what they think is important. And so let's say, for example, the instructor who designed the course or the course designer happens to be an accountant that works with a lot of small businesses who still use a periodic system. That might be why. I've just been thinking about why as we've been talking. They emphasized it so much. anyway, but
yeah, but when I was doing reading the book, then it says it very clear that I think it says you're likely to work with perpetuals because periodic, it's not very updated. It's, I don't know exactly what words they use, but
right. Well, you know,
I was like, is this something that we're going to be dealing with next week? Why?
Right. No, you know, I grew up in my mother owned a retail store, and we were a small retail store, and we used a periodic system. I had a spiral bound notebook, and once a quarter, I would have to go count every can of peas and then write down the number of them, and, you know, do that for each item in the store. It was a real pain. And then, you know, we would have to use that idea of what did we have at the beginning of the period, plus what did we purchase? That gives us what was available for sale. And then, you know, what do we have left over now, and subtract that out, and that tells us what our cost of goods sold was. And we had to do that regularly. And just, I mean, think about how cumbersome that is if you have more than about 10 items. We had several hundred items in our store. And so, you know,
I got paid to do inventory.
Yeah. Well, I went to my mother's store the other day,
manpower.
the people who bought it, and they've switched to barcode scanners so they can use a perpetual system because it's so much better. Anyway, any other questions about specific problems?
Yeah, I actually have a question. You were just saying the formula for cost of goods sold. Can you explain that? I can't really grasp the idea. I know how to put the numbers in Excel and get the result, but I don't know what it really means in the real world.
Okay. So I'm just bringing up a little Excel spreadsheet here. And so the idea is, at the beginning of any period, I'm going to have a beginning inventory, right? So that is the cost of all the goods sitting on the shelves or in storage at my business. That's my beginning inventory. So for this example,
what do you mean cost? Like the price that you paid for them? So
yes.
If you were, like your mom's business, the cans. So
right.
It was like the cost of how much she paid for the cans?
Correct. Yeah. And so not the amount that we are selling them for, but the amount that they cost us.
Okay.
So inventory is always carried on our books at our cost. Okay.
That's the very reason why I'm grabbing one.
So let's say.
There we go.
Let's say at the beginning of the period, we have $10,000 worth of inventory. Then each time we purchase something, we're going to record it to our purchases account, right? So throughout the period, each time we purchase, we add up our purchases. And so let's say during the period, we purchase another $30,000 worth of goods. That means that during the period, the cost of all the goods we had available for sale is $40,000, because it's the $10,000 we already had plus the $30,000 we added to inventory during the period. Then at the end of the period, we would go through, when I was a kid, I would go through with my spiral bound notebook and count up all of the things we have, and then we could, I could say each can of peas cost us 50 cents, and I could multiply the fact that there were 20 cans times 50 cents, and I could do that for all the products. And that amount, so the cost of everything sitting on our shelves at the end of the period is our ending inventory. So let's say our ending inventory is $7,000. So if we subtract our ending inventory from our cost of goods available for sale, that's going to tell me what I sold. So that will be my cost of goods sold. And so when you do a periodic system, you have to do this every period, whether that's monthly or quarterly or yearly. It depends usually on the size of the business. and how up to date you need this information to be. This ending inventory number will become the beginning inventory number for the next period. Then we would add in any purchases we made during the period to get our cost of goods available for sale. Subtract out our ending inventory at the end of that period, and that would tell us how much we sold during the period.
So
Does that help? Oh, go ahead.
Sort of. I always get confused with the ending inventory coming into the equation. If you were missing the ending inventory, like, because there was an exercise, like there is a problem in the homework that you're supposed to fill in for the ending inventory. I was able to figure it out, but it was like I wouldn't be able to do it again if I had to.
Right. So if I were going to do this algebraically, I would say my beginning inventory plus my purchases equals my cost of goods available for sale minus my ending inventory equals my cost of goods sold.
So you would take cost of goods sold. If you didn't know your ending inventory, you would take cost of goods available for sale minus cost of goods sold, and that would get you your ending inventory. Right?
I would take, if I didn't know my ending inventory, yes, I would take my cost of goods available for sale minus my cost of goods sold, and that would give me my ending inventory amount.
And why is the ending inventory important for your cost of goods sold?
Well, because we can't keep track of our cost of goods sold as we go in a perpetual system. I mean, in a periodic system. So I guess we could try, but the whole keeping track of it as you go, that's the whole definition of a perpetual system. So in a periodic system, what we're doing is we're saying, hey, what did I have available for sale? And then I can always get this number because I can just count it up. I can go out there and actually add up the inventory that's sitting on the shelves. And so then I use that to calculate my cost of goods sold. So what I had available to sell minus what I have left over must be everything that I sold. So it's important because it's the one thing that's verifiable, right? I can verify what I had at the beginning, I can verify what I purchased, and I can verify what I had at the end just by going out and counting it up physically.
Okay, I think I'm beginning to accept, to understand. I think just practicing will make everything make sense.
Right, but the reason it's confusing to you is because you're thinking like a modern business person, which is, I don't have to calculate cost of goods sold. I can just keep track of it, right? I have machines that can do that for me. If you're Walmart, every time someone scans an item across that scanner, it automatically deducts it out of inventory and adds it to cost of goods sold. And then we don't have to worry about calculating it. But at my mom's store, we had a little pricing gun, and we would set the price and put that price on each can of food. And it would have been very hard for us to keep track of the cost of each of those things we sold as we sold it. So we added up our ending inventory and subtracted it from our cost of goods available so that we could know what our cost of goods sold for the quarter was. So hopefully that makes some sense.
Yeah, I think just memorizing the formula right now, it's what I need to do.
Okay, and that's okay, right? Like that's, I say sometimes we have to understand the what before we can understand the why. And so you're right, sometimes you just memorize the formula. That's how I got through calculus class. I just memorized those formulas, and I still couldn't explain them to you. I have a daughter who's a math teacher. She can explain them to me, but I can't.
Yeah.
So is part 2 similar to all this stuff, like just more similar stuff, or does it go into the perpetual?
No, it doesn't go into the perpetual.
No, it goes into the periodic more, right?
It does, yeah.
Oh,
Because
okay.
like 5.1A, the one we just looked at, like that one, let's see, is perpetual. And 5.4A.
So whenever we see that income statement that has that is shorter than is perpetual, or is it the longer income statement? Because in the book, that exercise I think that you had, it said partial. So it said income statement and then in between parentheses, partial.
Right. It just means they weren't showing all of it.
Oh,
That's all that means. There was more to it. They were just focusing in on one part.
Oh, okay.
So sometimes a periodic income statement will actually show the calculating of the cost of goods sold. So it will actually show, like, beginning inventory plus purchases less ending inventory, and then have a line for cost of goods sold. So that would make it a little bit longer.
Okay.
But yeah, I don't think looking at the length of it's going to be a good indication. That's why they have to tell you in the problem if it's periodic or perpetual, because you can't tell for sure. The inclusion of something like purchases would show that it was periodic, because purchases don't ever show up on a perpetual.
Oh, okay. So purchases don't show in the perpetual.
Right, because purchases is just this temporary account we're using to accumulate the purchases, during the period, so that we can use those to calculate our cost of goods available for sale and then our cost of goods sold. Whereas in perpetual, we just make the journal entry straight to our merchandise inventory when we purchase things.
Oh, okay. Okay. So it goes straight to those accounts.
Right.
Okay. That's why it's easier to to fill those blank spaces, because you don't have to do with so many different accounts.
Yeah, that's true. Is there any problem in that second homework set that you would like me to look at or explain?
You mean part 2?
Yes.
I don't know. I haven't gotten that far yet.
How about you, Patricia?
I finished, but I think that it would be beneficial to her to show the last one.
Okay.
Of the part 2, just because that was the one that I had the hardest time with.
Okay.
Can you shut the door?
I think the other ones, I think the first 3 ones, they have this exercise demonstration, something like that. And then you have to do 3 like 100% on your own.
Okay. So yeah, let's pull that one up. Let's see. So this 5.9a. Is that the one you were talking about, Patricia?
Yeah. Okay. Yeah.
So if we want, I can just kind of walk through it, and that may be helpful for anybody who's looking at the recording too later on. So at the beginning of the current season, on April 1st, Granite Hills Pro Shop showed cash of 3,000, inventory 4,000, common stock of 7,000, and then they give us these transactions, and we have to journalize the transactions. So we'll see, and it's going to tell us right here they're using a periodic inventory system. So it will tell you, just because there's no way for you to know for sure. Anyway, so when they make the purchase, they're going to record that to purchases. That's where the debit's going to be. And then it says on account. So we'll do accounts payable as our credit. Then they paid the freight. And so again, we're going to debit our freight in and credit our cash.
How do you know if it's freight in or freight out?
Well, because we're purchasing it. So we're paying the freight for it.
Oh, okay.
You'd pay freight out if you were selling it to somebody and paying for the
Okay.
yeah. Received a credit for the merchandise returned. So on April 9th. So when we receive a credit, that means our accounts payable is going down. So we're going to debit accounts payable. And then our purchase returns and allowances account will receive the credit. On the 10th, we sell merchandise on account to members for $1,340. So
it's sales of revenue because we're selling.
right. So accounts receivable because we sold it on account, we didn't get cash, and then sales revenue. If we were doing a perpetual system, we would have to do that whole big entry to figure out that we do the second entry, right? Where we would also
Right.
do our cost of goods sold, but we're not tracking cost of goods sold until the end of the period in periodic. So that's why that's one of the main differences is we don't deal with cost of goods sold until we get down to the end of the period. And then we're going to use our purchases accounts and our ending inventory to calculate our cost of goods sold. That's the big difference between the two. Anyway,
So 12.
on the 12th, we purchase some stuff for $830 on account. So purchases is our debit, accounts payable is our credit. So each time we make a purchase in the periodic system, we debit purchases, credit, either accounts payable or cash if we pay cash. On the 14th, we pay the Arnie company, who is the one that's the one we did at the beginning. This one's a little tricky because we purchased it for $1,500, but then we had a return of $200. So we actually only owe them $1,300. People a lot of times will put the full amount of the purchase.
So when you read, I was confused about that one because why did they give us a credit? Like
because we returned merchandise.
Okay. Oh, okay. So we returned some goods and then they gave us some money back.
Right.
Okay.
But they didn't actually give us money. It just reduced the amount of our accounts receivable, our accounts payable. So that's why we debited accounts payable on the 9th to show that, well, before we owed them $1,500, now we'll only owe them $1,500 less this $200, so $1,300.
Okay.
So then when we pay them,
and then less the discounts.
Right. So that when we pay them, we have to say, okay, I owe $1,300, and I got a 3% discount on that. So I'll show my accounts payable going down by the full $1,300, but my cash only has to go down by the amount. That's actually 90% or 97% of the accounts payable was at 3, and then the other 3% of the accounts payable is my discount.
So you always do it in that order. So that discount doesn't apply before returns. It always applies like within the 10 days.
Right. So actually, believe it or not, in the real world, some companies do it one way and some do it the other. Some companies record everything as if they're going to take the discount. And so they would record the actual purchase at the discounted price. And then if they ended up not taking the discount, they would do an adjustment for that. But most companies do this where they'll record the purchase at the full price and then show the discount when they take it, when they pay for the product within the discount period.
Okay. But for this class, we're only going to use the calculation after
at the time of payment. So if we pay within the discount period, we'll show the discount.
Okay.
Okay. On the 17th, we received a credit from Wood Sportswear for merchandise returned of $30. So again, our accounts payable goes down or gets debited, and our purchase returns and allowances account gets credited. On the 20th, we made sales on account to members of $810 with terms of net 30. So we show accounts receivable going up and sales revenue going up. On the 21st, We paid Wood Sportswear in full. So again, we have to think of the fact that we originally owed Wood Sportswear, let's see, $830. Then they gave us the $30 return. So now we owe them $800. And then the terms of that was 110 net 30. So we get a 1% discount on that. So we're going to come down here. We're going to show our accounts payable going down by the full $800 we owe them. We're going to pay them $792 in cash. And again, the way I would find that is I would take 800 and multiply it by 0.99 or 99% of the total. And then my discount will be 800 times 0.01 or 1% of the total. On April 27th, we granted credit to members for clothing that did not fit properly. So here's a sales return and allowance of $80. And then our accounts receivable is going to go down or be credited $80. So now this is us providing that credit to our customers because they weren't happy with how something fit. We let them keep the product, but we gave them an $80 credit. And so we credit our accounts receivable. Finally, on the 30th, we received payments on account from members of $1220. So our cash goes up $1220 and our accounts receivable goes down $1220. So really, like, all the basic principles of journal entries that we learned in the earlier chapters are applying here. There's just a few new accounts to deal with that we're not used to. And then that dealing with the whole discount.
I like this journal entering for periodic better. It's less confusing.
You think it flows a little more?
It's just, there's just so many things in the other one to remember that I'm thankful there's accounting software nowadays.
Exactly. And that's the thing, is in real life, like, no one does this anymore. The computer does it for you. But it is important that we understand the process that's going on underneath. You know, we have lots of accountants here where I work, and the ones who understand what's going on underneath make about 3 times as much as the ones who are just entering the transactions. So that's something, you know, they'll pay for someone who understands the processes. So once we've done that, it's just T accounts to find the balances of each of those accounts.
Mm-hmm.
And then a trial balance,
Mm-hmm.
which is easy once we know the balances of each account.
Right.
And then
the income statement.
This big crazy income statement, right? With the sales, with sales revenue less the returns and allowances gives us our net sales. And then here's where we have to figure out our cost of goods sold. So we take our inventory at the beginning, which was given at the top of the problem, and it tells us that the inventory at the end of the month is this 4263. So we have to take our inventory at the beginning, add in our purchases, which came from all of our transactions, and then subtract out our purchase returns and allowances and purchase discounts. That'll give us our net purchases. Add the cost of the freight in. That gives us the cost of goods purchased. And then the cost of goods purchased plus the inventory at the beginning gives us our cost of goods available for sale. Subtract out our ending inventory, and that gives us our cost of goods sold.
So
our sales revenue
is the ending inventory given at the top?
Yeah, it's given right here. So the beginning inventory was given at the very beginning, and then the ending inventory is given here at the top of part D.
Okay.
And the rest of this information all comes from your trial balance that you made by doing the T accounts that you made by doing your journal entries.
Right. You got to get the journal entries right, and then
Right.
everything else sort of flows.
Right. And that's it. Piece of cake. Right, Patricia?
Yeah, it just took me 2 hours.
And you're like, what could I be doing with this 2 hours? I could watch an entire movie. Oh, but I don't have time to watch movies because I'm taking accounting. like that.
Yeah.
I don't. This is my only class. Like the people who have more than one class with this class.
I have more than
Oh my gosh.
one.
This is all I can handle.
Yeah.
The promise is, if you ever go into this as a career, it's not as bad as all this. This is
Because
the
there's
one
software.
thing, for one, and for two, this is all brand new. Like you're thinking about this in ways you haven't had to think about it before. And you know, like I said, I never do this for my business. I record my sales and I record my expenses, and then I say, give me an income statement, and it does that. But occasionally I have an error and I have to dig back in there and find it. So understanding how it's all interrelated really helps with that.
So my only other biggest thing is that last exam. I thought I understood stuff, but then when I went in there, there's a lot of stuff I didn't understand. So I don't know how much that plays in. I mean, I know that they say you have the first 4 chapters you really need to know. And I feel like I understand the first 3 chapters, but when it comes to the whole, this is understated or overstated, I'm trying to think of some of the other ones.
Yeah, it's usually the adjusting entries that kind of throw everybody for a loop. And then the whole understated, overstated thing.
Mm-hmm.
The things that are most important to being able to press forward in the class are understanding how to apply the rules of debits and credits, and the adjusting entries to an extent.
So when you say rules of debits and credits, like, I mean, there's, what accounts have a normal debit balance and what have a normal credit balance, and whether credits or debits increase it or decrease it. I have that memorized.
Well, that's the most important thing.
But then taking that and applying it to the sentences where it's saying this is overstated or understated or that stuff,
right.
Having a hard time connecting those.
Yeah, and that is harder. And just to let you know, like exam 2 is like super hard. Like I didn't look, but I bet you the median, historically the median score on that test is probably about a 60%.
I got a 73.
Yeah, so you're well above the median. I think there were three A's out of 46 students on that exam. And it's the hardest one. People tend to do better after this one. And so what I try to tell people is like don't let it freak you out. People still do fine in the course even if they struggle with exam 2, especially if they understand those concepts of what you just explained, those basic rules of debits and credits, because that's what you're gonna, you're never gonna stop doing journal entries. Those are gonna be part of this for the rest of the course and into the second accounting course. But what happens is you just hit a point where you're doing journal entries and realize like, oh, I didn't even have to think about that. I just knew where to put the debit and the credit, and that's why I say it's like the times tables of accounting. You learned those, and they were hard in 3rd grade when you learned them, or 4th, depending on which school system.
I still don't have all the times tables memorized. What do you mean?
But
I mean, I can figure it out.
Right.
But...
And someone could say to you, well, it's dumb to have you memorize those because computers can do that for you. Everybody has a calculator on their phone. And yet being able to do quick mental math is sort of dependent on basically being able to do your times tables. And so being able to do good mental accounting is dependent on you understanding the basics of the debit and credit rules. So I wouldn't get too discouraged about that exam score. For one, it's not as bad as you think because you did okay. And for 2, most people do better from here on out. And for 3, I haven't told everybody this yet, but near the end of the course, there's a chance to retake one exam of your choice to try to improve your score on it. So that, so if you say you did well on the first one and you do pretty well on 3, 4, and 5, you can go back and try to improve your score on 2 if you want to.
But
anyway.
What happens with that? Let's say I got a 73 and I do it again and I totally bomb it.
It's still the higher of the 2.
the higher of the two.
Yeah.
Okay.
But that's a ways off. I don't need to get people's hopes up. I just don't want people this after. I'll tell you honestly, after exam 2, I have people drop the course every semester because they're so discouraged by doing bad on that exam that they just say, you know,
I just ate lots of no bakes.
Okay. Yeah. People gain an
and
average
watched a movie.
People gain an average of 4 pounds and watch 3 chick flicks after exam 2. Like I'm sure there's a statistic on that.
Well, I watched Overcomer. It's a really good movie. That's what I watched after that exam because I couldn't think about anything else. I'm like,
it wasn't. You did okay. You were well above the median. Anyway, I know that's not necessarily your standard. Is not to be above the median. It's to do well. Anyway, so I recognize that that it's a tough exam. But I think we're probably coming to the end here. We've been in here over an hour, and my wife would probably like me to come home at some point. So, any other questions? She likes it when I'm home.
No, thank you so much.
She at least pretends like she likes it when I'm home. I don't know. All right. Hey, Patricia, would you be willing to offer a prayer to end the meeting?
Yeah, sure.
Thanks.
I was just sending my kids away 1 second. Okay. Our dear Heavenly Father, grateful for this day and for the opportunity the Lord has given us to take this course and learn new things. We're grateful for the opportunity to be a student at BYU, Idaho, and for being blessed with instructors that have the desire to help us and to see us succeed. Bless us that we can have a good rest of the week and we can learn the contents in this chapter, and that we can get ready for the next chapter and the next week's exam. And we say these things in the name of Jesus Christ. Amen.
Amen. And also, if anybody ever wants to do a review of the concepts they missed, I am willing to meet up one-on-one and do that.
Well, how do you don't know what are you talking about exam concepts or because
exam concepts?
They don't tell you what you missed.
Yes, but I can pull it up and I can look and go over those concepts with you if you want. So that's there too, and we can set up a time via email and do that. So anyway, I just putting that out there. I've done that for a few students already.
So for that, so when you would say that, you would be like 6 o'clock and later, or?
No, I mean whatever time works for you. I have a pretty flexible schedule.
Because I usually try to do it during the day. Nighttime gets sort of crazy.
Yeah. Well,
at my house.
Well, send me an email if you want to do that. And like I said, my regular classes I teach end at noon, and so I occasionally have meetings or other things, but I have a fairly flexible schedule in the afternoon, and on Tuesdays and Thursdays I even have some time in the mornings. So anyway, just let me know and we can do that.
Right now I just have to get this